Good afternoon, everyone. Thank you for joining us. We've just opened up the webinar. I can see the attendees starting to join now, but we'll give everyone a minute or two to join and then we'll get started. I'd like to thank everyone for coming today. I know there'll be more attendees joining over the next minute or two, but I'd like to kick off with an introduction. This meeting will be recorded, so it will be available once we have finished. We will be doing a Q&A session at the end, a moderated Q&A session. So if you do have questions during the session, please feel free to put them into the Q&A for us. We will try and get to as many of those as possible and leave time for that Q&A session. If there are particularly specific questions about your circumstances, then we will, after the webinar, provide a contact point that you can reach out to the team to discuss those specific questions. First, I'd like to thank you all for coming. My name's Catherine. I am the Head of Formations at Clara. I'm sure I've spoken to you over email or over the phone to many of you. Thank you very much for joining this session. And I wanted to say a very big thank you to Daniel Paxton and Grant Bateman from TLB Advisory Services. They have very graciously put together this presentation specifically designed for Clara customers, looking at the UAE corporate tax for ADGM entities. So there's lots of information out there generally on the new UAE corporate tax laws, but this session will be specifically aimed to answer your questions coming in from an ADGM company perspective, which is fantastic. So I'd like to hand over at this stage to Grant, and I'll let you take it away. Thanks, Grant.
Thanks, Catherine, and welcome everybody. And for those fasting, Ramadan Kareem to you all. And I hope the holy month has progressed well for you and your family. Thanks for the introduction there, Catherine. What we're planning to cover today is, as Catherine said, the presentation will specifically try and target the ADGM community, both from the SPV and also the operating companies as well. So we'll go through a bit of a recap on corporate tax and the introduction of it in the UAE, discuss the latest requirements and the deadlines for registration, which there were some announcements in the past couple of weeks on specific dates for when your company was registered. Importantly, some small business relief that is available to all companies and ADGM companies, of course. A little bit about the free zones and how the ADGM fits into the free zones, some working examples of each of those as well. Some interesting impacts on companies having permanent establishments outside of the free zones and how that will work. And then some compliance matters on tax calculations, filing of deadlines, and then your next steps to get started. So just a little bit about us. We were formed in 2013 to look after small and micro businesses as well as larger ones as well. We've assisted with companies, particularly during their startups and after their establishment. Our primary role is accounting and outsourcing for companies that are not big enough to have their own in-house team, or some fractional types, finance manager, CFO type advice as well. We do a fair bit of specialist advisory on companies and as they grow, as they contract as well. and we have a incredible diversity of companies within the UAE and the MENA region, where pretty much we've covered most, let's say, activities or companies. And your particular company, we're probably only one step away from your company itself with some of our networks and our relationships. Of course, importantly, one of our key aspects is VAT and corporate tax advice. So about myself, as I said, I founded the practice in 2013. Daniel has recently come on board as our corporate tax manager in the UAE, and I will hand it over to him now to go with the presentation. Thanks, Daniel.
Thanks, Grant. Yeah, so first of all, just a quick recap of corporation tax in the UAE. So corporation tax will be effective for financial year starting on or after the 1st of June 2023, and it will be levied at the following rates. So taxable income not exceeding 375k will be subject to 0% tax. Therefore, this is effectively the allowance for the first 375k. Taxable income above the 375k threshold will be at 9%. And the corporate tax will apply to the following businesses. So any natural persons who conduct business in the UAE with revenue exceeding 1 million dirhams, and natural persons, that's unincorporated businesses such as sole traders, any unincorporated partnerships, limited liability companies, including those in the free zone, such as the ADGM, and any foreign residents that carry on business through a permanent establishment. So first of all, just wanted to talk through the registration, which is recently released by the FTA. So any person, natural, legal, with any trade or commercial license in the UAE will need to register. As I previously mentioned, natural persons with turnover less than 1 million dirhams, so any unincorporated sole traders will not need to register. And similarly to VAT, it will just be answering the questions on the Amara tax portal used from the MOA and trade license details, etc. And a unique tax reference will be created. Failure to register for the deadlines released by the FTA, which are seen as below, will result in a 10,000 dirhams penalty. So essentially, they've released the deadlines in line with the issuance of the trade license, regardless of what year that trade license was issued. So as you can see, it's staggered on a monthly basis, and there's a 3-month deadline for each. So the first deadline for Jan and Feb trade license will be the 31st of May 2024. And then it follows on through. For newly incorporated entities, they will have 3 months from the incorporation date to register.
So then I'll just
Yes.
just to reinforce with everybody that's on the call here that registration is required for every company. So anybody that has an ADGM company on this call, obviously while you're here, you will have to register that company regardless of some of the exemptions that we see that are coming down in further into the discussion. Registration is a non-negotiable when it comes to this.
Yeah, thanks, Grant. So just quickly moving on to some of the reliefs that are available to businesses. So first of all, small business relief. So the UAE has introduced small business relief to effectively ease the tax burden on small businesses. The initial guidelines do suggest that the small business relief will be available up to December 2026. And any taxable business, including those in the ADGM, with revenue below 3 million dirhams, will effectively have no taxable income and will be able to submit a simplified return. And as Grant mentioned previously, all companies, regardless, will still have to register for corporation tax. So other reliefs that are available for ADGM free zone entities. So with what known as qualifying free zone persons, and they effectively could qualify for 0% on qualifying free zone income. Excluded income will be taxed at 9%. We'll go into a bit further detail what is excluded income and qualifying income in the presentation. The full list of qualifying free zones has not yet been released by the FTA. However, we are expecting that these will be aligned to the free zones for VAT. So that includes the ADGM, DIFC. And free zoning income also is relevant for mainland or foreign juridical entities with a free zone branch. So just expanding on the qualifying and excluding activities, as previously mentioned. So qualifying activities includes holding of shares and other securities, whether that be from mainland or overseas, regulated fund and wealth management, headquartered and finance services to related parties, and also revenue from distribution of goods from a free zone business to another free zone entity or export out of the UAE. Excluded activities includes transactions with consumers or businesses in the mainland, regulated banking, financing or leasing activities, royalty income from intellectual property, so that includes trademarks or other intangible assets, and income from a movable property unless the property is situated in a free zone and is leased by another free zone entity. So de minimis requirements. So this is the tax terminology for determining the allowable amount of excluded revenue from a free zone company. So if a free zone company has excluded revenue, which exceeds 5% of total revenue or 5 million dirhams, whichever is lower, then all of the entities will be subject to 9% corporation tax. So if revenue from excluded activity is below 5% or below the 5 million dirhams, then they will qualify for that 0% rate, and only their excluded revenue will be at 9% corporation tax. So we'll go into some further examples just to show how that works. So in this working example 1, for this ADGM SPV, they have onshore dividend income of 4 million and offshore investment income of 1 million. In this example, both onshore and offshore dividend income are qualifying activities. So this SPV will benefit from all income being subject to the 0% tax. In a second example, this ADGM SPV has real estate income offshore or in the free zone, and it also has real estate income on the mainland. Immovable property income is excluded unless it's within a free zone. So therefore, in this example, only the 4%, the 0.2 million is excluded revenue, and that 0.2 million will be subject to 9% corporation tax. Finally, in this example, we've got an ADGM with income from securities amounting to 4.5 million and income from royalties from an IP of 0.5 million. And as you can see here, the royalties from IP income is at 10%, and that's also an excluded activity. So therefore, this ADGM company will lose that 0% benefit, and they will be subject to a full tax return. However, we'll go into further details as well on some exempt incomes for securities. So this, when filing the full tax return, this ADGM entity may benefit from the 4.5 million being exempt. We'll go into further detail on that shortly. Just wanted to touch base quickly as well on the domestic permanent establishments. So a domestic PE refers to where an ADGM entity has a place of business outside the free zone, i.e. in the state. So income attributable to that PE will be subject to 9% and will be treated as if it was a separate mainland entity. However, it will not disqualify the free zone company from benefiting from that 0% tax rate on qualifying income and won't be included in that de minimis test. So on exempt income for the full tax return, so first of all, domestic dividends. So any dividends and other profit distributions received from a resident person, they are exempt from corporation tax. There's no additional condition that the company has to meet in order to benefit from that exemption. And overseas dividends, so foreign dividends are exempt for corporation tax if the resident person has a participating interest in the foreign company, and the participating interest needs to meet the following criteria. So it's ownership of at least 5% for at least 12 months, and that foreign company is subject to 9% corporation tax on where it is based and what jurisdiction. And finally, any foreign permanent establishment income, so any income from an overseas establishment or branch. So disallowable expenditure on the tax return. So first of all, non-deductible interest expenditure. Any interest on a loan from a related party where the purpose of the loan is to gain a tax advantage to obviously prevent companies from inflating costs in one entity and reducing the taxable profit. There's a general interest deduction limitation. So where any external loan interest exceeds 12 million dirhams, the allowable deduction is the greater of 12 million dirhams and 30% of EBITDA. Any donations, gifts, and grants to non-public benefit entities. And on entertainment expenses, so 50% deduction is allowable for client, shareholder, and supplier entertainment expenses. However, for staff entertainment, it's 100% allowable. So it's important on our chart of accounts that we split that out, and we can adjust accordingly on the tax return.
Sorry, Dan, I'll just
Yeah.
expand a little bit further on the non-deductible interest. So as a classic example, if you still have some related entities that are sitting in tax-free jurisdictions or lower tax jurisdictions, and you want to shift some of the some expenses out of the UAE and into that jurisdiction. So if you had a related party in the BVI, for example, that still has no corporation tax, and you charge them, and that company over there was charging interest on loans to your ADGM company, because you've got a related party there, the tax office would look at that quite closely to ensure that the whole purpose of the loan and the interest is just not to create a deduction inside the UAE, thereby taking some of the tax that may be payable in the UAE and taking that moving that expenditure out into a non-tax jurisdiction.
Yeah, thanks, Grant. So just going into further details, a bit more what we spoke about there. So transfer price and adjustments. So related parties must apply the arm's length principle on all related party transactions. So this effectively means that the price of the transaction between the related parties should be the same as if the transaction had taken place with an independent party. An example of that would be directors or owners' salary recorded in the P&L should be aligned to the external market, i.e. in line with the salary they would pay to an external employee if they were to be in the same role. And again, that's the same thing as what Grant spoke about, to avoid any manipulation of profits by inflating the cost in the P&L. The FTA have mentioned as well in the guidelines that any related party transactions, they may request for an assessment on that disclosure as well. So finally, foreign tax and withholding tax credits. So corporation tax payable may be reduced for foreign tax credits in the same period. So any foreign tax credit and the relief does not rely on a double tax treaty. Also for withholding taxes for cross-border transactions, they can also be deducted from the taxable income. So here's a quick overview of what the tax return would look like for the entities that do not qualify for the small business relief and for those entities that have non-qualifying income. So it will be your accounting profit, less the exempt income we just spoke about, i.e. dividends, less those add back, the related party interest expenses, add back donations, grants and gifts, the entertainment expenses, transfer pricing adjustments, and then the foreign tax credits. And as we mentioned, the 375k, the first 375k will be at 0%, and anything above that will be at 9% tax. So this is just a quick summary of the flow of how we're going to get to the CIT calculation. So the first question we can ask for each entity is, does that taxable entity or person qualify for small business relief? If the answer is to yes, and they have revenue below the 3 million dirhams, tax will be at 0%, and it will be a simplified return to follow. If the answer is no, then we need to look at if they're a qualifying free zone. So ADGM, that will be yes. Then we get to the de minimis test, so looking at whether the excluding activities are less than 5% or AD 5 million. If they fail that de minimis requirement, this is when all their taxable income will be subject to a full tax return. If they do qualify for that de minimis requirement, then this is where they'll get their 0% benefit on their taxable profit, and any excluded income will just be at the 9% still. So the administration side of things, so following the first return, so taxable persons will pay corporation tax and the corporate tax return within 9 months of the relevant period. The tax return will be filed, as mentioned, on the Amara tax portal, so where we're doing the registration, and there is a 500 dirham penalty for each month of the delay past that 9-month period. So this is just a quick overview of when the first tax returns are going to be due for different year ends. So for entities with a period ending 31st December, the first applicable CIT period will be the period ending 31st December 2024, and the first return will be due on or before 30th September 2025. For period ending 31st of March, so the first period that will be relevant will be the 31st of March 2025, and the first return will be due on the 31st of December 2025. For newly incorporated entities, so the first applicable CIT period will be the counting period per the MOA, and the first return period will be due 9 months after that, essentially. So just a summary of the next steps to ensure we're ready for CIT. So obviously, first of all, making sure we're registered to avoid those late registration penalties. Ensuring all the books and records are up to date. For the ADGM companies, the qualifying and non-qualifying revenue is identifiable in the chart of accounts. So we've got different chart of accounts for those. Any exempt and disallowable expenditure is identifiable in the chart of accounts, so we can accurately adjust in the tax return. And finally, the related party transactions are in line with the arm's length principle. And if they're not, we would have to do an assessment on that. So finally, just a quick summary of how we can help at TLB. So obviously, the assistance with the corporation tax registration commencing now. Any questions and advice in the lead up to the tax period. Financial period financial statements. Assistance with the preparation of corporation tax returns and the calculation of the taxable losses carried forward. Ongoing advice as and when the FTA release any new guidelines. They are consistently releasing new updates as we speak, and to assist with the review of any potential restructuring into free zone and non-free zone entities if there is a cost benefit to do so. So that's all from me. So I think this is just, I'll hand it back over to Catherine for the Q&A.
Thanks, Dan. I'll just drop in before
Yeah.
Catherine moderates the Q&A. So in the meantime, if people do have questions, if you can hit the Q&A button as opposed to the chat button and put your questions there. There have been a couple of questions during the webinar that have been answered. Most of them relating to does a SPV have to register? And yes, the answer is yes. There is no way out about that. One thing, obviously, that to keep in mind, it's the earth is not or the sky is not falling. One of the key items that Dan mentioned there is the small business threshold. So revenues of less than 3 million dirhams will mean that there's zero tax, regardless of the profit of the entity, regardless of the accounting profit in the year. If your income is less than 3 million, then there will be zero tax. So you could have income of 2.75, have a profit of 2.71, and there's no tax payable. So the thresholds of 375 only start getting into when you start losing all those exemptions of small business exemption, qualifying free zone exemption, and any of those other exempted incomes that will, as was discussed during the conversation there. So just something there to reflect on as you go through your accounts. Catherine.
Thanks, Grant, and thanks, Daniel, for the presentation. As Grant mentioned, there were a few questions that came in on the Q&A during the presentation that have been answered, and I just want to make sure everyone's across those as well. One of the questions we had is registration required if the revenue is less than 1 million dirhams? And as Grant just reminded us, yes, all ADGM entities must register for corporate tax. The 1 million dirham exemption that was mentioned earlier in the presentation only applies to non-incorporated persons. So bottom line, everyone in ADGM with an SPV or a tech license or an operating company, anyone with a registered entity will need to register for corporate tax. This recording will be available after the session, and we will be in contact with all attendees with a follow-up as well. One of the questions that did come in was around the process for registration of corporate tax and whether Clara would provide support. Following the presentation, we will be providing you with a follow-up email, and we will give you the contact details for TLB. They will be assisting Clara customers as well as many other customers with corporate tax registration, and then can have more detailed discussions with you around your particular circumstances if you would also like some advisory services. One of the questions that did come in that was answered was, can I clarify if the limits mentioned are based on net taxable profit, not revenue? And Grant did confirm that yes, it is net income after expenses applicable to each class of income. Grant, is there anything further you wanted to mention on that, or is that you're happy that one's covered?
No, that's fine. It's, as I said, funny enough, the legislation talks about income. It doesn't talk about profit. So we're keeping the terminology in line with the legislation at the moment. But yes, it's obviously based on income after your expenses, which, as we know, is your accounting profit.
Okay, perfect. One of the questions was, Grant, perhaps you can see where you have a UK parent company, so a foreign ownership of your ADGM entity. So the ADGM entity is receiving revenue into the bank account, and then that is being pushed up to the UK parent company. The revenue is below 1 million, and it's also captured in the UK tax returns. Can you comment generally on that position?
Well, first of all, it'd fall below the small business exemption of 3 million dirhams. So for that purpose, and again, I don't want to get too far into the weeds on this, but income going, if the income goes back to the UK, then that is fine. Obviously, there's some form of intercompany recharging that's going on. That's fine, and it's taxed in the UK. But just remembering that because the revenue would be below 3 million, there is that small business exemption up for the first 3 years of corporate tax up to 31st of December 2026.
Okay.
Now,
Terrific.
just as a follow-up on that, because you've got related party payments there, once you get over that, you fall outside of that 3 million exemption, and you're outside of some of those other exemptions, so you are in the full tax calculation. The Federal Tax Authority can look at those related party payments just to make sure that they are arm's length and not moving profit out of the UAE in order to reduce tax.
Okay, thanks, Grant. One of the questions that's come in is, are taxes calculated on the basis of audited accounts? What financial statements need to be submitted? And we know that for a lot of ADGM companies, particularly in SPVs in their early years, they're going to be below the mandatory audit threshold when it comes to filing accounts with the ADGM Registration Authority, which for a lot of these companies are also due by 30 September. So perhaps you could comment on when the submissions are done, what needs to be submitted.
Yeah, okay. So as far as we're aware at the moment, the only time that you'd be required to submit audited financial statements would be for the purposes of maintaining your qualifying free zone exemption. That's the only point in time that we see it at the moment. So if we work through those examples, if the company satisfied, well, if it exceeded the $3 million dirhams first turnover, it's exempted income, and it didn't, sorry, and it succeeded on the de minimis requirements, and it applied the zero rate of tax applicable to free zones, then that is the point, yes, when there has to be audited accounts supplied as far as part of the submission.
Okay, thanks, Grant. Connected a little bit to that is, so if all entities are required to register, what is the filing that is required if there is no tax payable? Can you just talk through a little bit on that?
Yeah, we haven't really got any guidance yet out of the Federal Tax Authority about what the returns will look like. All we understand at the moment that for the purposes of say for a company that's under the 3 million, so applies a small business exemption, there will be a box on the return that just says simply that you tick the box to say our income is below 3 million and we're applying the small business exemption, and that should be it. Things like the other thing to consider as well is that because there's such a lot of reference in the legislation and all the releases so far to related parties, we do believe that there will be a fair bit of the return set aside for the purposes of identifying payments to related parties. Now, they may be interest on loans overseas or internally in the UAE. They might be for salaries paid to directors, owners of related parties, and also for, if you're a trading company or a trading ADGM company and you've got a parent or another related party in other countries, they may be looking at the income or the expenses that have been incurred or received from those related parties as well. But
okay,
as
sorry.
I said, we haven't got a copy of the we haven't seen the return yet. Unlikely that we would see something of the return. The first tax period started on the 1st of June, so companies are going to start lodging returns, or potentially start lodging returns, by the 31st of May, for those companies that fall into that lodgement period. We would expect the return will be available very, very shortly.
Okay, terrific. Thanks, Grant. One of the questions is, can you elaborate more on what doing business only within free zones means?
You want to cover that one, Dan?
Yeah, so that's so like selling free zone to free zone essentially. So anything that's within the free zone and is being sold to the mainland, that would not be qualifying. So that'd be the excluded stuff we talked about.
And the other thing as well, as far as we're aware, this relates to goods only.
Yeah, sorry, yeah.
So, you know, if an ADGM company is selling services, we don't believe that will fall into that activity.
Okay, terrific. One of the questions is, our entity is a non-transacting SPV holding company. It doesn't generate any revenue. Can this be classified as exempt? I think first and foremost, we're going to fall under the threshold there, but perhaps you guys would like to comment further on that.
Yeah, so that's what Grant spoke about before as well. We'd still need to register that company for corporation tax, but then we just elect for small business relief anyway, so there'd be no tax to pay.
Terrific, thank you. And in terms of how dividends are treated, are dividends received by an ADGM SPV, are they treated differently under the tax regime?
So say again, sorry, dividend. Could you expand what on the dividends of wherever they're from? Sorry.
The question is, how are dividends received by an ADGM SPV? So dividends pushed up by a subsidiary, how are they treated under the tax regime?
They'd be exempt. They'd be exempt income anyway, so that's fine.
Okay, perfect. A question was regarding sharing a link where...
Sorry, just some clarity on that. So yes, they would be exempt, but you then got to have a look at if you just want to flick back to that slide, Dan, on the on dividends.
Oh, sorry, the split between overseas and
yeah, so
domestic.
any dividend from a UAE company obviously falls into the domestic dividends. So the assumption there that the company has already made a profit in the UAE, it's already paid tax. So any transfer of that net income from the trading property to the SPV, for example, it would be exempted income because there's the tax has already been paid on that income. The overseas dividends, then obviously you've got the issue of it has to meet the requirements of a participating interest. Did you want to just expand on that participating interest and what would be and what wouldn't be, Dan, and what type of companies would apply to that?
Yeah, so it's an ownership of at least 5% for at least 12 months. That's all we have at the minute on that. And like it says there as well, that company as well needs to be subject to at least 9% corporation tax on whether they're based. So those are the 2 points at the minute that we can see in the guidelines, but they haven't really expanded on that as such as of yet.
Yeah. So if you sort of think that through, if the SPV owns a greater than 5% share for at least 12 months in a company in the UK, which has paid dividend, so tax of at least 9% up there, then any money coming back from that company into the UAE would be tax free. If you for whatever reason bought Donald Trump shares the other week, then you wouldn't have a participating interest, for example, in those shares or Apple shares or any sort of listed share or investment in a fund, for example. You wouldn't have an ownership of at least 5%. So any of that income would be coming in and would be subject to tax. But then again, just go back to your exemptions of if you earn, less than 3 million a year, then you're not going to be subject to any tax for the first 3 years.
Thanks, Grant and Daniel. A follow-on question came in over chat saying if the company's paying dividends are UAE free zone companies, how would that impact on that would come under the domestic dividends, wouldn't it?
Yeah.
Yes.
Yeah.
Okay. someone was asking for a link to the website for the registration. We will provide that in our follow-up email that we send out following the presentation. There was a question about ADGM foundations and the need, whether they need to register. And I imagine the answer is yes, but I'll ask the experts here. Our foundations considered falling under the regime?
Foundations, nothing specific on them yet. The issue of foundations is that the income would generally be distributed. So, you know, the foundation, if it's like similar instruments around the world, like trusts, then because the income is required to be distributed under the deed of the foundation or the agreement of the foundation, the tax most likely is payable in the hands of the beneficiary, not the trust. Sorry, not the foundation. We'll get some more clarity on that. Maybe that's a follow-up that we can issue later on when we get some information out of the Federal Tax Authority. As I've said in other presentations, you know, this legislation is a little bit over 12 months old, and you know, it's going to take a little bit of time for the Federal Tax Authority to catch up with, you know, these type of things as we go ahead. So, for example, the UK, the US, the Australia, New Zealand, we've had hundreds of years of taxation and the opportunity for these instances to come up. UAE, not so far yet.
Okay, terrific. And we can share that follow-up information with customers as well. One of the questions is around where you have a group structure within the UAE. So an ADGM company setting up an onshore branch, and how the branch is treated compared to the ADGM company. Are you filing as a group or individually? Can you comment on that, please?
Yeah, so we would do a group registration in that case. And on the onshore branch, that will be treated as a permanent establishment in the mainland. So that's where that branch will be subject to tax at 9%, but it will be treated as if it was a mainland entity. It's completely separate from the ADGM. So it won't exclude you from any of that 0% potential benefit for the ADGM company.
Okay, thanks, Daniel.
No worries.
One of the questions is, it says our income from our company in the UK will be subject, well, will our income, I beg your pardon, be subject to corporate tax in the UAE if it is effectively managed here? So the UK company is owned by an SPV company registered in ADGM.
No, well, if the UK company is a tax resident in the UK, then any income from that point is subject to tax in the UK first. If you pay a dividend from that company down to the UAE, then obviously it comes into those rules of overseas dividends as to whether or not it's taxable in the UAE or not.
Thanks, Grant. Mohammed asks us, how is commission received from outside the country by a free zone company, not as an employee, will be treated? Do we need to get more information from Mohammed on that one and go back to him?
If I read through the lines there, commission received. So the ADGM company is going to receive commission from outside of the country. Then it's income from outside of the country. Yeah, maybe Mohammed, if you want to go offline with that one, and we can get a little bit more detail.
We have a question. So we have an ADGM company, but our revenue and operations are in KSA. With that one, I don't understand the second part of that question, so we might reach out to Ola separately. Ahmed asks, are there any exceptions for GCC companies, especially with ADGM SPVs owned by individuals or companies in the GCC?
No, ownership is not relevant. It's the registration of the company in the UAE.
Okay, perfect. Well, we've covered all the questions in the Q&A section. A few people have asked for the slides, which we will make available. Any closing remarks, Daniel or Grant, at this stage? Otherwise, we'll wrap up.
No, from my side, look, thanks very much, everybody, for your time. I know it's tough at 4 o'clock on an afternoon, especially in the middle of Ramadan. So thanks for your attention, especially when we talk something like tax. Hopefully we've answered some of your questions, and obviously, as Catherine said, there'll be an ability to get in contact with us later if you've got any specific questions or how we can help. Thanks to Dan from my point for preparing the presentation, Clara and Catherine and the team there for enabling the technology for us to speak to you all. And look, I hope it's been informative for you, and we're here to assist wherever we can. Thanks, Catherine.
Thanks, Grant. Thanks, Daniel. We really appreciate your time, and thank you, everyone, for coming today. We know that a lot of you will still have questions, quite specific questions about your circumstances. So we really encourage you to not delay and to reach out to the wonderful team at TLB, who can provide you with advisory services, assisting with your registration, and ultimately then with your filings. And we will provide you with their contact details in our follow-up. So thank you, everyone, and we'll wrap it up there nice and early. Thanks, everyone. Bye-bye.
Thank you, guys.
Thanks, everyone.